This is James Chen, Chief Technical Strategist with Citi Index Group. Today is May 19th, 2015, and we're going to be looking at the technical week ahead for four major currency pairs, the euro dollar, pound dollar, dollar yen, and Aussie dollar, as well as gold. Now before we get to that, just a quick risk notice. Financial trading carries a high level of risk to your capital with the possibility of losing more than your initial investment and may not be suitable for all investors. Ensure that you fully understand the risks involved and seek investment advice if necessary. Okay, let's first take a look at the currency pairs. Here I have the euro dollar in front of me. Now, as we can see here, price action on euro dollar has dropped within the last 2 days, including today, after hitting a high just above the 114 resistance level. This is, of course, off of a double bottom low, as we can see here, right around the 105 level, slightly below that in March, slightly below the 105 level, and then right around the 105 level back in mid-April. And as we can see here, since mid-April, for about a month, we could see a rebound or a partial recovery here up to the 114 level, and slightly above that we hit a high right around the 114.65 level or so, and this was back just 2 days ago before coming back to the downside. In the last 2 days we see this this drop to the downside. And here moving back down towards the 111 support levels we can see on euro dollar. So this has been a pullback off of this rebound, as we can see here. Now if there's a breakdown below the 111 key support resistance level, as we can see here, if there's a breakdown below there, we could be returning back down to the 108 target and eventually towards the 105 target. But for now, we're still above the 111 target. We've still got strong resistance up here right around the 114 area. And again, if there is a breakdown below 111, looking towards the 108 target to the downside. Now let's take a look at the pound dollar. Here we see another sharp pullback after this rebound and partial recovery here. In this case, on pound dollar, we see price action broke out above the 157.50 resistance level, going towards the 159 level before pulling back sharply, as we can see here, targeting back down to the 155 level, which it has dropped below as of today. And as we can see here, looking towards this drop below 155, if pound dollar is able to continue trading under 155 and indeed break down below the 200, re-break below the 200 day moving average, and then we could be looking towards the 152.50 target to the downside once again, possibly to resume the bearish stance on pound dollar that has been in place for quite some time. Despite this big move, this big partial recovery and rebound to the upside that we saw in April and in early May. So as we can see here, once again, a pullback off this rebound, and right now we're back down towards the 200-day moving average. If there's a breakdown below there, we're looking back down towards the 152.50, possibly towards the 150 psychological support resistance level, which is a very strong support resistance level, as we can see right here. Let's take a look at dollar yen. Dollar yen continues to consolidate, as we can see here. Very tight trading range here. Most recently, as we can see here in the past couple days, we've seen a rise in dollar yen for a renewed dollar push to the upside, as we can see, but for now continues to trade within a range trading situation here, a tight range consolidation. To the upside, looking back up towards the 122 level, if we're ever able to get back up there, 122 is the next major target to the upside, followed to the upside by the 124 level to continue possibly this uptrend that has been in place for quite some time. But as we can see here, dollar yen tends to consolidate for quite a long time, and this is no exception, as we can see currently. So looking up towards the 122 level once again, we've got strong support down here at 118. Let's take a look at Aussie dollar. As we can see on Aussie dollar, yet another pullback, and we could see that price action broke out slightly above the 81 level as we can see here, the mid 81s, and it hit the 200-day moving average before pulling back to the downside, and it hit the 200-day moving average for the first time since September of last year. So this was a pretty major hit up here on a major rebound from the long-term lows, the multi-year lows. So this was a major rebound, a push to the upside. It hit the 200-day moving average and then came back down, pulled back, and currently retargeting the 79 level to the downside, which is a major support resistance level. If there's a breakdown below there, looking back down towards the 77 level, and for a resumption of this bearish trend in Aussie dollar. Let's take a look at gold real quick. If we take a look at gold, here's gold. We saw this big move to the upside in the past week actually. Big move that broke out above both the 50-day and the 200-day moving averages. We hit a high right up here, right around the 1232 level, just shy of my target at 1240 before today pulling back thus far. So as we can see here, once again, we were near the long-term lows, right down here around 1180 support. Before last week, we saw a break to the upside, a break above the moving averages as well as this downtrend resistance line. A break to the upside, it hit a high just short of the 1240 level before today pulling back. If price action on gold is able to stay above the moving averages, then once again we still have the 1240 to the upside as the major upside target, and then above there, if there's a breakout above there, the 1265 level to the downside, we continue to have strong support around the 1180 level on gold. So right now, though, after this big move to the upside, we did see a pullback, and it remains to be seen where price action goes. But again, 1180 as strong support, 1240 as strong resistance, and above there 1265 as a major target to the upside on a further continued recovery of gold. And this has been the technical outlook for the week ahead. Thank you very much for your time.